Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. Fair bit to get through this morning, what we've all been waiting for. NVIDIA. Welcome, Phil. Good morning.
Good morning, Mark. Good morning, everyone.
And the software stocks as well, a little bit overshadowed by NVIDIA. However, they were pretty exceptional, really. So NVIDIA was down a little bit leading into this number. And then on the initial results, which, look, I mean, so the initial reaction, was a 2.5% sell-off. So try to marry that with these numbers. So revenue of 96 billion, expected 92 billion, up 106 year on year. So beat consensus by a lazy 4.3 bill. Data center revenue up 117%. Q3 guide will be 108 billion per quarter. Plus or minus 2% in revenue. That beat Wall Street as well. Gross margin guide was up 50 basis points at 74%. The street hoped for 75, but I mean, let's face it, like anything in the 70s as your gross margin, you're pretty happy. And then supply commitments doubled, which I guess is a risk in some way, shape, or form. But that was to lock in memory, so probably not a bad reason to do it. But fifth straight post-earnings sell-off, and then enter Jensen, the hype man. And I'm pretty sure this is the reason behind it. But he came on and said, he said AI has reached the inflection point. Vera Rubin's now in full production. And then said AWS and NVIDIA partnership with 2 million GPUs. You got to remember, people, these are like 40, 50 grand a pop, these things. And then Vera CPU integrations coming to AWS, which is, a more efficient way of doing it. They're going to do an Amazon robotics collaboration using NVIDIA's physical AI platform as well. So like all of these names, so, they're not just selling the GPUs anymore. He's been correct in identifying very early, and it was when I changed my mind on this stock, because I think I said famously on Ausbiz, this will be the poster child of the AI bubble, and then I think that was around about $120. But then when he mentioned that, Cisco, the whole Cisco example, and, they don't want to be another Cisco and things, and how he was diversifying, we changed our mind and we bought it when it peeled away back in that April sell-off in Liberation Day. But happy to. You don't always get these things right, and the worst thing you can do is just dig your heels in. Like the likes of Roger Montgomery, who's still calling the AI a bubble.
Ostrich trading, head in the sand.
But sometimes that can work. But
true.
And then we had software stocks up as well, but mainly after the bell. Palantir was up. Oracle was kind of neo cloud, I suppose, was up. Memory chips, but I mean, look, it was really fairly flat, to be brutally honest. And then after our movers, Salesforce, which was massive for the SaaS-pocalypse stocks, smashed it, up 12%, 15% in the aftermarket, and they expanded their Anthropic partnership. CrowdStrike was up 12%. A fellow that was in cybersecurity, Okta, but much smaller, it was up nearly 20-odd%. ServiceNow has been doing pretty well as well. So those software with a moat, SaaS-pocalypse just categorically doesn't really apply. Really feeding through into the US market that realization. Obviously, Aussie investors are a little bit more conservative. Yesterday we had WiseTech, obviously, and I think down. I mean, there's nothing much to see here in terms of the net changes for the overall market. We were down 0.4. But that was basically CPI, which was a little bit hotter than expected, and now they're calling for November rate hikes again across the board. But up until that point, we were kind of up, right?
We were actually up quite a fair bit.
So, but the Aussie market or ASX investors, they do love turning a positive into a negative. That's NVIDIA's income statement. I'm not entirely sure why I put that in there. I just struggling for a bit extra slide, I suppose. But yesterday's ASX earnings, mainly positive, really. I mean, Nine Entertainment, they're up 7%. That'd be the first positive earnings day for Nine Entertainment since about 2020. anything, I mean, apart from WiseTech, anything sort of stick out?
So we mentioned that yesterday morning.
Yeah, it's one of the very few consumer stocks that have done well. Woolworths, very surprised.
Same as Coles. Coles, they're both up 3 or 4%.
Well, but for Woolies to hold that, I mean, when Amanda Bardwell took over, and it was like, it's always the same story on the ASX generally. Some middle-aged white bloke or screws up, and then they put in a woman to fix the mess. And she started the AI customer platform, which ended up being a very impressive business in its own right. But it was at like $26, $27. Woolworths is now like at 40 and held its gains. Like
40, 41.
I'm really surprised about that. I still think it's probably expensive. Worley, again, probably should list on the US market, because in Australia, we dig through the earnings report to find any form of weakness, whereas in the US, but down 10% was a pretty harsh. I mean, it's under $10 now. I mean, it's probably one of Australia's sneakier. I think it's got something like, it's tens of thousands of employees. It's the biggest energy infrastructure company in the world, just about. But they always seem to find the negative in it, because it's such a huge business. It's on every continent.
It never reports well, does it?
For whatever reason, but I mean, they just seem to keep ploughing on. I think there probably will be some value there at some juncture. But Levisa was very good. Nine was pretty good. Sandfire, I mean, that's copper. Blind Freddy could have reported well there. Tabcorp, Snooze, Worley, but WiseTech, big one was down 10%.
Surprise.
I think that'll probably turn around, at some stage. It may not be today or tomorrow. But overall, we're now. I pulled down the all of the earnings and results and blah blah blah, and got it to calculate the forward PE. But we're a forward PE now of like 27. So this isn't the heady days of 100 PEs and no one could really work out, particularly on socials and X.com, etc., why it was down. And then I think it was sort of reverse engineered an excuse for the move, saying it was like, softening cargo-wise growth, organic growth at 11%. But at a 27 PE, I mean, probably CBA's probably got a higher PE and half the growth. And so, look, I would expect on a the big tick-offs were no scandal. It's still growing, and their cost-cutting measures, particularly from AI, are improving. No one really expects the ACCC thing to go anywhere. Paladin was up, uranium was up, but they, reporting was pretty good. But your favourite stock, Bapcor.
Here we go. Let's wait and see.
And wait and see whether that can turnaround story is probably an understatement for that. I think for Bapcor investors, it's probably the best analogy is feeling like they've been in quicksand for the last 2 years. Hopefully the new CEO can throw them a rope. But Crude Energy, another company that loves to clutch defeat from the jaws of victory. Magellan, Barrenjoey thing, who knows? Mineral Resources, probably okay. Lithium.
Pilbara reported well.
South 32 is another one of your favourites, mate.
Well, that'd be good. Interesting to see how that, reports today. It's had a good run up, and actually has a lot of silver.
It does,
which a lot of people don't really know. And with silver being on a bit of a rampage. So,
and I think it'll continue higher. But and then what else? Star, Sigma and Wesfarmers. Wesfarmers obviously pretty complicated business. I mean, you've got Bunnings, Kmart, blah blah blah. Then they've got like a massive lithium mine. So it'll be interesting to see how much of. I did see the Bunnings CEOs retiring, but look, I mean, Wesfarmers is usually always very high quality. Doesn't matter what they're in, whether it be lithium or bloody cheap T-shirts at Kmart or Bunnings. Like they seem to just be able to do very well. So. But it'd be interesting to see the sentiment, I suppose, there today. Qantas, I mean, that could be interesting, I suppose. I mean, it's been a little bit lower. Some headwinds. Ramsay Healthcare would be shareholders in the prem out there again. And we're coming up. We've got Jackson Hole on the weekend. And I think that's pretty much it, really. That's like earnings is basically done now here and abroad. Well, which is possibly not a great thing, considering because now I'll have to actually look at the economy, the US debt and Treasury yields as the main source of news. All of which and Iran, all of which not so good. So. So yeah, I would expect. I mean, we did have. Sorry, and then PCE was up 0.2, 3.7 year on year. It was above the forecast. So that's the Fed's favoured inflation gauge. Apparently, you're contractually obligated to say that line every time you mention PCE. 10-year yields were up a couple of basis points. Well, obviously ours were as well. Flattest in the 230s. Not that. I'm not going to bother explaining that. Brent was off a little bit. What do we got? I think Barkin, we've got Barkin speaking. Not much else, I've got to say. So yeah, I mean, probably, I think the SPI was down marginally. It will be interesting to see a few of those names that reported yesterday, what the broker upgrades, downgrades are overall, I suppose. But...
And in fact, for the day, there's 900 Bapcor stores. There's only 200 something Bunnings stores.
There you go.
Yeah, I know. Who would have thought? I know.
Jeez.
So I don't know if that's a good thing or
it doesn't feel like that. I've got to say.
I might double check that fact. Someone in the room, I think, and the trading room.
If AI doesn't have to fact check, why do we have to fact check? Just from an actionable standpoint of view, Xero will obviously be interesting. Intuit didn't report well yesterday, but only ended up down, I don't know, 3 or something. That's their competitor in the US. I think Xero would probably, the SaaS-pocalypse for those quality names is been I'm going to excuse my language, but it's just been horseshit. So I would expect that she needs to earn a little bit of trust, the CEO, after selling those shares. And whether they stick to their capital discipline on that rule of 40 thing. But yeah, I back WiseTech to, I reckon by Christmas it'll be back in the 60s somewhere. And that's, short of the founder getting very tried for war crimes or going to jail or dying. All three of which could be possible. Who knows? But if they just stay out of trouble, I think that I think away she goes. But and there's a bit of a lag. And Viva last night in the US, which is one of our software survivors strategies, reported very well and pumped about 10% after the close as well. That PME and Viva in that worst of pair, I think, is up over 200% now. And we only put it on in March. So, a little bit of a pat on the back
happy about that.
For us. Already out of the cybersecurity one, that was up 400%. So, and if WiseTech kicks up, it's somewhere around the flat or down 5%. It's the only one lagging in that whole thing. Will be 3 from 3, which is quite rare in those. Not much in the commodities and things overnight. Go and have a look at the webinar on demand now, mpcinvest.co/webinars or mpcmarkets.com.au/webinars. This is our next strategy, following on from the software survivors, which has been an absolute killer. But go and have a look at this, have a look at the webinar, and then have a look at the investment strategy. It's a 2-year strategy, backing those names and say like the Neo Cloud, the interconnectivity, and things like that. Our resident tech nerd, Kai Chen, does his best to break it down. But look, the easiest analogy is, these are all the things that, we've got GPUs is 90% of the time. There's not really much need for any more computer LLM. This is the stuff that's going to make it cheaper, usable, and get some of that ROI, which is what, at the end of the day, is what is where this thing's going to make money and be a long-term thematic. And there's some governance in there as well. For all of us who are fearing that Skynet might be a reality. But look, guys, have a great day, and we'll speak again tomorrow morning.
Have a great day, everyone. See ya.